The NEOS Real Estate High Income ETF, ticker IYRE, launched on January 14, 2025. It targets high monthly income by combining U.S. real estate equity exposure with a covered call option overlay on REIT ETFs that track the Dow Jones U.S. Real Estate Capped Index. IRE holds between 60 and 70 REITs within that index. No single company may exceed 10% of the index, ensuring diversification within the real estate sector. The fund is actively managed and employs both exchange-listed options and flex options to generate premium income monthly. The call options are backed by real estate securities that the ETF holds, which makes them covered calls. That earns premium income but also caps upside beyond the strike price. The fund's goal is to generate high monthly income while still offering some equity appreciation potential from underlying REIT performance. IYRI's total annual expense ratio is 0.68%, which is reasonable for an income-focused, options-based ETF. As of July 31, 2025, the fund's net assets were approximately $80.5 million, and it traded around $50 per share. Its 30-day SEC yield was 3.18%, but its distribution rate was 11.13%, meaning distributions were larger relative to current NAV. That distribution is comprised mostly of rental dividends, option premiums, capital gains, and sometimes return of capital. In fact, distribution notices show recent payouts were 87% return of capital, indicating the fund paid out more than it earned in ordinary income. From inception through mid-2025, IYRE's NAV returned about 5.84% annualized, while the market price return was 6.03%, slightly outperforming due to premiums and timing lags. Compared to its benchmark index, which returned 4.93%, IYRI captured both dividend income and call premium income. IYRI's portfolio includes elite names like Welltower, American Tower, Prologis, Digital Realty, Equinix, Realty Income, Simon Property, Crown Castle, CBRE Public Storage, among others. These names span healthcare, data center, industrial, retail, and telecom tower REITs. The capped index and covered call overlay together limit volatility and downside to some extent, while also muting large upside when property values surge. Tax efficiency is complex. Because much of the payout is return of capital, the distributions lower cost basis and delay capital gains taxation. However, investors should note that most of the income is treated as ordinary income or capital gains depending on the composition. If held in a taxable account, the effective tax rate could be high. IYRE may be best owned in tax-advantaged accounts. Investment risks include market risk from REITs, options strategy, risk tracking error, counterparty risk for flex options, liquidity risk, and issuer concentration limits. The fund will underperform in sharp real estate bull markets because written calls cap gains. It may also underperform when volatility falls and option premiums shrink. In bear markets, the fund will decline like other equity funds with limited offset from premiums. In the first half of 2025, IRI returned around 3.52% on NAV and about 3.74% on market price, outperforming its real estate benchmark modestly. Looking ahead, IYRE may continue offering above-average yield with modest total return potential. It is ideal for income-focused investors such as retirees or income funds looking for elevated monthly yield and some equity exposure. However, it is not a substitute for a broader REIT index or long-term core holding due to capped upside and return of capital risk. My meter ratings: income 9 out of 10, risk 7 out of 10, sustainability 6 out of 10, growth 4 out of 10, final rating 6.8 out of 10. Investors seeking stable high monthly income with sector diversification may find IYRE appealing, but they should understand that this yield comes at the cost of growth and includes tax complexity. If you have any videos you'd like me to cover, say it in the comments below and I will break it down in plain English.